guys, it's Ronnie. It is Tuesday, July 7th. I hope everybody had a restful July 4th weekend. I have been off for a few days, so I'm going to give you guys a weekly recap. I believe the last video I did was on the 30th of June, end of the month. So we'll go over kind of what's happened in the past week and some of the trades that we talked about last week, which have come to fruition, and I was able to get in a couple of them. I also got stopped out of that Nvidia position, and so we'll talk about that. And got in a few more positions last week at the end of the week, and actually today as well. So let's go first over the S&P 500. We'll start with the weekly chart here, and you can see we are still within we're above actually the purple trend line, which we actually closed above the purple trend line just before the July 4th holiday. But we are still below the descending trend line that we talked about as our next potential area of resistance. And you can see this is just the start of the week, but it has rejected that trend line and is on its way back down as of today. More than just today, but more so at the end of the day versus throughout the day, because actually it was pretty bullish in the morning, as you can see on the left side, which is the intraday chart. Okay, so moving on to the daily chart, this purple trend line again, we've been keeping an eye on for a while. It's in a longer term complex trend line, and we're looking for it to be an area of resistance going forward. It actually has not been that great in this time frame right here. More than that, I can see that the 200-day moving average has acted as kind of an area of support. Now that I'm looking at it on a longer term basis, you can see this 200-day moving average where it looked below there and failed, came back up, and it actually acted as another level of support here a week and a half ago as well, which is actually a higher low. So that is actually pretty interesting in the sense that it's a higher low, and the 200 days is also converging here with the 50-day. So that could continue to be an area of support. If it breaks that, then we can think about potential lower prices for the S&P 500. Overall, let's just talk about kind of what it's done over the past week. So we saw, we talked about here these three areas, these three tops in this area of resistance right here. We had talked about potentially, it would continue to be an area of resistance. However, on Thursday of last week, which is the last trading day, I'm sorry, this is from Monday. This is Thursday of last week. On Thursday of last week, it did pierce above that area of resistance, and we talked about the next level being this gap fill, which is from this island reversal pattern up here. It actually did, because it did pierce that level, I had to actually get shorted out of a couple of, actually just Nvidia, I got stopped out of on last week, and or like kind of middle of last week. And then Monday, you can see it went all the way up to this right, almost at the to the tick. Let's see, the low here is 31.81.49, and the high here was 31.82.59. So it's about $1, like $1 off. But it did hit that gap and close just below the gap fill on Monday. And so that was like, an area I was looking for a potential reshort, right? So we talked about this trend line, and if it did make it above the gap fill, the next section of the chart that we'd be looking for resistance is this this longer term trend line from the prior high back in January. So today, let's go over to the left side, which is the intraday chart on the 5-minute. Today we actually we had gapped down because overnight, there was a little bit of selling, which is unusual for the S&P 500 as of late. So you can see we gapped down in the morning here, here was the close from Monday, and here's the gap down. So we gapped down about 30 or so points in the S&P. And then we started just rallying. We filled the gap in. We extended above it. This is the gap fill line, 31.81.49. Went all the way up to 31.84.15. Didn't quite make it to this trend line, and then started to descend again. So there was a failure of this recapturing this trend line again. This pivot again. So as soon as it broke down below the pivot and wasn't able to get back above it, so you see it retested right here. Oh, I'm on the wrong thing, but you can see that it retested on the 5-minute right there. So you've got this high here, retest here, and fail. So as soon as it closed below this this low right here, so we've got this kind of a head and shoulders pattern. I wouldn't call it a head and shoulders technically, but you could think of it as a head and shoulders pattern. With the neck being right here. Oh goodness, I'm not doing well with the charts today, but you see what I'm saying there. Lots of ovals. But in general, head to shoulders, and the neckline would be right here where my crosshairs are. So as soon as it crossed below this area of congestion here, where there's kind of a double neckline, that's where I actually shorted. I shorted some more XLF. I shorted some more IWM. Some more. Actually got into a short on the SPY today as well. So let me just put an arrow here of where I'm talking about, right there. And then I didn't anticipate that it was going to go all the way back down here, but I did expect some weakness off of this pattern right here because it did fail to get back above that 31.81.49 level. So towards the end of the day, you can see there was continued weakness. It broke down below the 50 moving average on the 5-minute, as well as the 200 moving average on the 5-minute as well. If you took a look at the 15-minute intraday, you could see also you could have reshorted or gotten more short underneath the 50 moving average on the 15-day, which would have been a great trade. Or even if you take a look at the low of the day, at the prior low, which was the morning low, about 31.59, also a good short. Now, this was the best trade location of the three. However, you could have easily taken a couple of trades towards the end of the day. Now, this is just the first day, right? One day does not make a move. So what I'll be looking for going into tomorrow and the rest of the week is continued downside, at least, maybe to the 20 or to the purple trend line again. So we talked about this trend line potentially being an area of support or resistance. If it isn't an area of support, which kind of coincides with the 20 moving average here, I'll look back for this 200-day or even the 50 to ascending. This is a rising 50-day moving average as well. So these are kind of some targets on the downside for me. And again, it's going to have to stay below this red descending trend line here for me to continue to stay bearish. So if it can maintain in this area or even get go further down, I'll keep the shorts I have on, obviously, but the targets are as indicated. Purple trend line or 20-day, 200-day moving average or 50-day moving average initially. And then we'll see if it can make it below this pivot right here, which is the prior low, around 3,000, right around a round number right there. We'll be looking for further downside. But overall, you can see it's still below this trend line, which is the shorter term trend line from the March low. It stayed below here. It hasn't gone back above that trend line, which of course would be bullish. It actually, the other shorter term trend line that I had originally put on here on the chart, which I took off, but I'll go ahead and put it back on so you can see why I took it off. It was, from this bottom here to this low here. It did cross below that, but it actually made it right back above. So, I could leave it back on, actually. I'll go ahead and leave it on. Because if it does manage to make it down below that, again, that's additional bearish bias. And again, it's right at that 200-day the 20-day moving average and that purple trend line. So I'll leave it on for now. It did, however, not really act as a level of support or resistance here, just kind of traded through it. It's a shorter term line, but we'll leave it on for the time being. So overall, S&P 500 looking for a little bit more bearish bias on the S&P for the short term. We'll see how it acts going into the coming weeks when we have earnings. Many companies, are going to start reporting earnings in the next week or so. So it'll be a lot of interesting movement in the markets, I would say, going into that earnings season. So we have to kind of keep an eye out for earnings as well, which is a definite binary event that you don't want to necessarily discount. This is an important earnings season as well. Being second quarter earnings being reported in July, that's kind of at the heart of where COVID had affected our economy. So it'll be interesting to see where they are and how, not just where those earnings are, because we know they're going to be bad, but also how Wall Street's going to interpret them. So more to come on that. Let's go ahead and move on to a couple of ETFs and stocks that I did get into on the short side going into this week and today. So let's start first with NVIDIA. I actually I took another short position on NVIDIA today, but I did get stopped out of my other position above this trend line. We talked about the red trend line. It had, the last video that we made, it was just pushing up to this trend line right here. And, I noted if it was going to go above this area, I would have to get stopped out of my short position because it did, kind of make a secure low right here. And it has continued to go way up since then. Took another short position with one option here just to kind of capitalize on this topping tail that it made today. You can see it made a topping tail on the chart today, and usually when it makes tails, it does go in that direction. A little bit higher volume than the other days, very slightly, but more than that, the pattern was strong. So we'll look for some continued downside in NVIDIA, at least to this prior high right here. So just a couple of days, we'll see. That's my anticipation. Even just for tomorrow, it might be a potential swing trade just into tomorrow for a shorter term profitability. So I'm not looking to be short NVIDIA for a long time, nor do I think that it is bearish by any means. But with this strong topping tail here and the action of the market today, I think we might get a little downside tomorrow, maybe the day after. So I'll be looking for that going into tomorrow. Trying to make some of that money back that I lost on NVIDIA being stopped out here. So, and it presented an opportunity, not just that I want to get money back from the same stock that I was in, but simply the pattern did show a good trade potential. So that's why I took the trade. All right, let's talk about Apple. I never got back short Apple, which is a good thing, but I also didn't get long, which was unfortunate. We talked about this being, potentially getting short underneath this gray area of congestion and not getting short until it cleared that area again. Even though it did get above this longer-term complex trend line and started to come down, it did start going back up again last week. And you can see it's just, kind of slowly grinding its way higher ever since at all-time highs today. Again, another kind of a topping tail, not as strong as the NVIDIA topping tail, but Apple's been really strong, which is interesting because they're continuing to close stores. They're having issues in the sense of their sales as well as closing stores. So, earnings coming up in Apple July 30th, it looks like, so plenty of time till earnings. I don't know. I don't anticipate that it's going to, unless there's some news, be very bearish until earnings time. So not looking to get into any trades in Apple right now. Again, it's one of the few stocks that's just driving this market higher, in addition to like Microsoft and Google and Amazon. Speaking of Amazon, just to show you how strong the Nasdaq has been, Amazon is just parabolic. We talked about this measured move, however, a while back, right? This when it made this had the same kind of action last year or earlier this year. You see it popped up really hard to all-time highs, and it has just continued to do the same thing. But it's about the same distance, about the same amount of, I'll make it a little bit more clear now. It's the same pricing change from here to here with respect to kind of the measured change or the measured move here. So it's about at a point where it could potentially start consolidating again or making a top or whatever that might be. It is super strong though, Amazon is, and it's done really well, obviously in COVID. But you can see today it had a little bit of a pullback, not much, but a little retracement of that gigantic move it's had. Okay, so moving on, let's go into the ETFs that we talked about. So XLF. XLF is the financial ETF that we talked about getting into short. I thought that it would bounce a little bit more than it did. It did bounce slightly, even though it closed lower, and it really just stayed right along this trend line. It bounced slightly on the 30th, which is the day that we were talking about. That I thought I had missed my opportunity to get in the the ETF down here on the 26th as it crossed below the longer-term trend line and the shorter-term trend line. But my thought was it would bounce a little and I'd have a chance to get back in it, maybe at the 20 moving average. Didn't quite make it there. However, you can see on Monday it did. Let's look at the left-hand side here to make it more clear. On Monday, it did pop up to 23.66 and come right back down, and then it gapped down this morning. I actually didn't get short until today. Wish I would have gotten short on this move here, this reversal move on Monday, but I actually ended up getting short today in the morning as it was crossing back below this shorter-term trend line. I've only taken about half of the position that I would usually take as a short because I'm looking to short it again as it crosses down below this prior low, if it crosses down below this prior low right here. So I am short XLF from this morning. Decent move in it so far to the downside. So looking to see if it can cross below this longer term trend line and then again below the 22.55 pivot here, which is the prior low. So more to come on XLF, but I'm holding some short XLF right now. And obviously my stop would be above today's high. So my stop would be the high of today, which is also a gap from Monday. The bottom of a gap from Monday, so my stop would be 23.23 on XLF. Moving on to, let's see, we have INDA. So this is one that I got stopped out of about 2 weeks ago on a trade in this area, as it just totally popped up. I mean, this was a crazy move to the upside, and actually really nuts to the upside the past few days too. Coming in strong to this 200-day moving average and a pretty good rejection at that point. So that's where I actually shorted in INDA, was below this big bar right here at 11:30 this morning. So I'm short INDA. It's kind of come down a little bit since then, but really looking to, you have a couple of targets on this that I've put up here, the pivots, closing of the gap from Thursday's high. Thursday's high was 30.61. Let's see. Yeah, 30.61, so this is a little off. So 30.61 is the gap fill. So that is a first target. And then the second target could be if it were to get back into the gap, the second gap right here. You've got this target, this pivot right here, the top, this prior high, which is 29.90, or this gap fill high, which would be 29.71. So 29.90 is probably a more safe target to have on it. So, 29.90 right there. So these are my targets. First target, 30.61. Second target, 30.24. Third target, this trend line. Fourth target, 29.90. Fifth target, the gap fill around 29.72. So INDA probably, personally, I don't think it's going to get below this 30.24 area. I'm looking just for a couple days swing trade, potentially going slowly into this trend line here. Or if it gaps down tomorrow and find some support in this range here, I will take my position off. It has been really strong, surprisingly, with all the issues going on with India right now, and with its conflict with China and Pakistan. So here's the weekly chart on INDA. It's still kind of in an uptrend. So really looking for a break of that uptrend before getting into any kind of heavily short positions. But it is coming, it's come up to that 50 MA on the weekly, the 100 MA on the daily, 200 MA rather on the daily. So some good resistance up here that we'll be looking to stay below. So that's where I am with INDA. I am short INDA as of today. So XLF today and INDA today are my shorts. And you would have an opportunity to short it again, especially INDA tomorrow after, maybe if it's below today's low tomorrow. So basically like below this low tomorrow, you could potentially get into it. It's the very beginning of the move that I'm looking at. So this is a good trade location to get short. And then you have your clear stop, which would be today's high, 31.14. Okay, so next let's talk about gold and bonds. Actually, I want to talk about FedEx real quick. I want to just mention that we did talk about FedEx post earnings on the 30th, and you can see here July 1st, which is the earnings. The earnings came out the 30th after hours, and we talked about getting long FedEx and this potentially being a target. So let's go to this 10-day, 30-minute chart. Yeah. So here is kind of where it was post earnings, and what I had spoken about here is potentially these two areas as being targets. Now it went a little higher than I would have liked pre-market, but as it opened, you were able to get over the first 1 minute high a trade in from 159 to 163ish, and I did take that trade, and it was a good trade to take, meaning it gave you a good opportunity. In this 5-minute bar, even 10 minutes, you had an opportunity for a good $5 there, $4. I took this trade on the 1st, right in the morning. Unfortunately, I would have liked it to stay around this 153 area, and could have gotten in at a little lower price, but it was strong in the pre-market, and FedEx is still kind of like maintaining in this wedge here that we talked about, this wedge from a longer term trend line to this descending, but it has crossed over this descending trend line, so there is possibility for it to continue higher. Here's kind of a longer term view of FedEx. So if it can stay above here and kind of cross above these two areas, it's got a lot of resistance on the way. So we'll have to see how it acts, but it does look like it could potentially be bullish in the longer term. It's in this big wedge. If you look at these two, so it's got a pretty big area with a bunch of resistance here. It could be pretty floppy, but that was an earnings trade. I just wanted to give you an update on FedEx, which was a successful post earnings trade for a couple bucks. Excuse me. So we'll move on to gold and silver. So let's look at the futures in gold. So here's the gold futures on the weekly. Still bullish, still pushing up higher. We had talked about this 1789.50 area as kind of the area for it to be, pushing through. It pushed through that last week and the week before last. Actually, last week's when it started closing above that. which is when I got long gold on last Thursday before the holiday weekend. Let's go to the daily chart on this. So you can see here it was kind of grinding at this level. It did cross above a couple of times. Cross above, came below, cross above. But right here on Thursday, as it was crossing back above it, because I missed this move right here, I did get into gold long. Sold some of my position today, just half, because I got a pretty big position, and it did really well today. So was able to get out of gold a little bit today. I'm still long. Most of my position sold, but I still have about a third of it left in gold. But I'm looking for higher prices. I just wanted to take some risk off the table in gold in case it had a little dip. It could easily pull one of these pull one of these moves where it crashes down right after it makes the up move. So I am looking again, gold target way up here at 1886 to 1900 longer term. So it could potentially grind up there slowly. But it had a good move today. Excuse me. Silver as well. We've talked about silver pushing through this resistance up here at 1891 on the futures. So still looking for it to get up there. It still hasn't pushed up into that area. But I will be looking to get long silver as it pushes through this area, and then even more as it pushes above these trend lines, this trend line, and even more above the more recent high of 1975. So, it could easily take a while to get there, but that's what I'm looking for in silver. Still not in there yet. And then we'll go into bonds, which I was also able to get into. Okay, VB. I was able to get into today. So I got into some bonds today. As we were, let's look at the TLT. It's a little easier to see on the daily. So here is the intraday of TLT. You can see it kind of pushed really high, pushed up higher in the pre-market, after hours rather, on Sunday, and then pre-market today. This is a big move in the bonds, although it still isn't technically above this area on the TLT. It did cross above that on the futures. So I am looking. I got a small position in bonds today as it was crossing over this area. This first 5-minute high. So you can see here. Here is the first 5-minute high area. So as it crossed above that area, I was able to get into some TLT. And then, it was a small position. So, sadly, I could have gotten a bigger position. It did, bonds did extremely well today. Really big bar on higher volume. So I'm looking for continued upside here and a push above this 165.55 area on the TLT for continued upside. Maybe, into this gap fill here, or even into this range up to 168 on the TLT. So taking a look at ZB again, you can see this is the area we were looking at for it to push above, which it did on the 26th, but it came back, failed that area. I didn't get in it on the 26th, which would have been a good buy, but then it came right back down. So I was kind of glad not to be in that position. But today it pushed back above it. I want to buy more if it crosses above this prior high up here of a 179.17. That's where I'll be looking to get into a little bit more TLT if it gets long, if it is long, continues to be long above that level, push up above that level. I am profitable in the position now, so if it fails, I could sell out of the position if it starts to get back below these two pivots into this area where that 50 moving average is on the futures. So that's what I'm using as my stop, is this 50 MA on the ZB. But you can see the 20 is curling up, so it has the potential of being strong a stronger move than not with this curling 20 moving average. So that's what we'll be looking at for bonds. And then lastly, I just wanted to show you guys Facebook. This guy gave me a really good opportunity today to get short. I mean, it looked really bad early in the day. You can see it was just really strong all morning. It got up above even this prior high and this pivot of 254.19, and it made it all the way up just about to this trend line, the longer term trend line. Let's put it on the weekly. So it's from a prior trend line, which actually got broken before, but I left it on as a complex trend line. So it almost touched it perfectly and then started pulling back. So as it started pulling back from that trend line is when I actually shorted the stock. You can see, and this is another way to think about risk and reward and positioning in trades, right? So you have a trend line or a pivot or something you're looking at as an area of potential resistance or support. If you put your trade on there, you know where your stop is, right? So I'm shorting it as it's coming down here, as it crossed this area below this. You've got kind of an M pattern here, like a little M top. You can see in the 5-minute. And as it was coming down below this level here, at the 246.50 area is where I shorted the stock. So being short the stock here, I know my stop is over this trend line. If it hits and crosses the trend line, that's my stop. So what's my risk here? My risk is from 246.50 to about 247.80. Let's say 248, right? $1.50. I know my risk is $1.50, and my potential reward is anywhere all the way back down to this lower trend line, any of these pivots, moving averages. I mean, I've got much more reward potential than risk. I mean, yes, it could easily tomorrow decide I'm going to go right back up, but with this, it's a huge topping tail. And actually, you can see in the after hours, it has gone down even further. So I'm probably going to move my stop because of this huge move. I'm not going to utilize now this trend line as my stop. I'll probably even come back from break even. I'm not even going to use break even as my stop. I'm going to use this prior high as my stop, 245.19. So I've already locked in this profit from 246.50 to 245.19, and this is my stop. So my stop is now going to be this 245.19 pivot. I'm going to mark it as a stop, being red and dashed. So I'm doing this as I'm talking to you on the fly. Just realized how much it's gone down in the after hours as well. So it's all the way down to 237.18. So that's a pretty decent gains just for looking at a trend line and deciding, okay, if it doesn't breach this trend line, I'm shorting this stock and utilizing this trend line as my stop. So that's kind of where I went with this. My targets with Facebook are 20 moving average, 50 moving average, and this pivot kind of coincides the prior gap, and then this longer term trend line here, which it goes back to 2016, and then this prior low, and then this other trend line, which goes back to 2018. So these are my targets on Facebook to the downside. I mean, Facebook has been, and I've been trying to short it. I actually shorted it, excuse me, a little bit in my retirement account via options on this day right here, on this July 2nd, before the weekend. Unfortunately, as I came into today, that position was stopped out because it got above that high, right? So I got short on the 2nd, going into the holiday weekend, thinking, okay, here's the top for Facebook. It's had this huge down move based on the news that many of its sponsors, like the people who are advertising on Facebook. Many companies are boycotting Facebook ads because of their policies. So they're doing 1-month boycotts at the least, which was what caused this violent down move here. Now, I expected a snapback, and then I expected it to roll over, which is what I thought this was. It did not breach the 20 moving average here, which should have been a sign for me. It kind of found a little support there, but it closed so close to it, and it was kind of bearish that I did take the chance and took the position. Got stopped out, however, yesterday. And so I was looking to get back into Facebook because I really think fundamentally it's a weak story. So I was really keeping my eye on Facebook today for the opportunity to short it if it got up to here. So it was on my radar, and it worked out pretty well. So looking for a little bit more weakness in Facebook with this giant topping tail here. Let's see if it gets below, if it opens and stays below this this low for today, which it looks like it will. I mean, it could easily come back up, but right now it's weak, and we'll be looking for continued weakness to the 20 moving average at least. So that will be my first target, and I'll probably take off some of my position there and then leave the rest to run. So that is it for today. I know it's a long video, but we had a lot to catch up on. I will continue to update you guys on some trade ideas as we go into earnings. There's a lot coming up in the next several weeks. And, you know, with the market itself, there are opportunities even tomorrow, even later in the week if it retraces to get short this market. I find that just looking at the profile, looking at the action, it has the potential to be lower, and that's what I think is going to happen. Again, we talked about this before, the summer months. People hopefully getting away for the summer. The volume usually dries up, and it isn't the best time for, for more upside in the market, like strong upside. And it's already, NASDAQ was already at an all-time high. And all these stocks are now going into earnings where I think it's going to be a little bit more cautious. So I anticipate going into in July and August, some pullback to this market, and that's what I'll be trading and continuing to trade with the ETFs that I mentioned, the IWM, which is the Russell, the SPX or SPY, which is the S&P, the XLF, which is the financial ETF, the INDA, which is the India ETF, and then gold and silver and bonds, being long gold, silver, and bonds. And you could even think about shorting the dollar as well. But instead of getting way into that on this video, I will save that for tomorrow or the next day, and we'll check back in with you then. So have a great rest of your week. Take care and happy trading.